Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shail Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, we have softened from the day's high point, holding just about 17 points higher in trade, flattish with a positive bias on the Nifty, 23,746. But what has lost ground clearly is the Nifty Bank. It was outperforming the Nifty in the morning trade, but right now it's underperforming the Nifty. 1/10% lower for this one. It's now trading at 85 points lower, 51,139 is the current level. Let us look at the key sectors that are still holding up. Autos driving in a faster lane today, 0.7% higher. Pharma, infra, consumer durables and PSU banks are holding up into some gains, but PSU banks have also come off the day's high point pretty sharply. The Nifty Bank, private banks, financial services, all of them have lost ground just in a single day. IT sector, when we look at the kind of losses that we are, 1/10% of a cut for this one. Realty has lost ground too. Even the broader markets are underperforming the markets as of now. What's holding up and about? On the Nifty, Adani Ports now nearly 5% higher, top mover on the Nifty. You have M&M and Maruti from the auto space that's outperforming 1.5% each. You have SBI Life Insurance. In fact, the insurance space is in thick focus right now. Shriram Finance and Bharti Airtel remain as the top movers, whereas on the lower side, you have Nestle, Asian Paints, Titan, Tata Consumer Products and JSW Steel that are still lagging. But a lot of action in the broader market. Stock-specific action continues. Good afternoon, Shell.
Good afternoon, ladies and gentlemen. There is absolutely no volume if you look at the Nifty counters. Reliance is the top traded one, and I haven't seen this lower volume ever at around 230, 235. Only 656 crores worth of shares have been traded. In HDFC and ICICI Bank respectively 640 crores and 610. The action is only and only in cash counters. Intellect Design is the second most active traded counter on the exchange today, and the top traded counter on NSE 500, 2,171 crores. Counter is at a record high, 12% higher. Amber Electronics, 7.5% higher, 2,122 crores. Masdok headed for a split, 1.5% higher, 1,300 crores. And you need to look at MobiKwik. This is the top traded counter on the National Stock Exchange. 5,000 crores worth of transactions done. The stock is up 10% and it was hitting an intraday high of about 680. So action is there as long as you know where to look for it. As far as all-time highs are concerned, there is KFintech, there is Newgen, there is 361, there is Amber Electronics, and of course, Lloyd's Metal. Sakshi.
Okay, let's welcome our guest on board then. We have Mr. Kush Gota, Sara market expert joining in. Kush, warm welcome. Good afternoon to you and season's greetings. Tell us what is the current setup in the markets telling you about expiry and what do we see from tomorrow onwards?
Good afternoon. Definitely, I think market is pretty much range bound. So as of now, on the index specific view, I've squared off everything recommended to all my clients. So 23650. If we go below this level, we'll short. If we go about 23,900, we'll go long. I think market is pretty much range bound. So we need to wait. As Shale sir said, volumes are pretty much low. So let's wait for some volumes, maybe today or tomorrow, and then we'll take a call on Nifty index. While Bank Nifty has shown some pressure from upper levels, so that is concerning, especially PSU banks. I mean, they were looking very much healthier in the morning, so now they are into pressure. So if we close below 51,000 on Bank Nifty, then we may see some profit booking following up tomorrow.
Okay. Got that. Kush, okay, let's look at any few stocks that you could also name for today. What are you keeping an eye out on, and is it on the short side again?
Definitely two stocks, which I think I have taken a stock specific trade is on HCL Tech. I believe IT stocks are in some pressure. Even Nasdaq futures are showing some pressures in early trades. So HCL Tech again, we can short for January future with a stop loss of 1940. On the downside, 1860 is my target, and below which 1810. And one SBI is on my watch list. Trigger sell below 810. We may see 760 levels in Gen series with a stop loss of 820. So SBI futures and HCL Tech futures for Jan series.
241, ladies and gentlemen, we are also grappling with the monthly expiry of the Nifty, which has been in a 200-point range today. 23750 is where the index is battling. A lot of profit booking happened on the Nifty Bank. It was up 500, 560 points in the morning, now down 90 at least. So 51,141 is there for you. This is absolutely the right time to look at rollovers. This is absolutely the right time to look at how strength is moving into January. Look at United Spirits, one of the highest rollovers that I can remember, 92%. The counter, 1563, up about 1%. In terms of top gainers and top losers, IGL is the top performing stock in December's expiry, up 23%, 398. We've been marking this very, very positively from 355, 350 levels. So I hope a lot of people have benefited from there. What also is in thick trade is Manappuram, 18% higher. The counter is at 187.3 in futures. Oberoi Realty, we normally mark on a daily basis, but IGL and Manappuram, we've repeatedly requested views on this in terms of positivity, and that's worked out really well. In terms of losers, well, there are so many that it becomes difficult to sort of talk of all, but amongst the major ones, Hero Motors down 11%, Canfin Homes down 11%, National Aluminium has slipped 13%, Escorts down 10%, Berger Paints down 9%, Exide down 9%. So auto has been one of the biggest losers as far as indices are concerned, as well as individual stocks are concerned, for two reasons. Data from Vahan website, which tracks daily registrations, has been disastrous for the auto sector. As far as the sales of December 2024 are concerned, compared with December 2023, there's a marked decline in two-wheeler sales. There's a very sharp fall in passenger vehicle sales. The only thing that has inched up is, of course, electric vehicles. And you can see the general fall in the auto sector. Let me just give you one idea. Okay. Hero Motors is the worst performing stock in December F&O in auto, down 11.5%. Bharat Forge is down 1% on a monthly basis. There are just three gainers in the auto F&O space, and they're all tire companies. Apollo Tires, 7.6% higher, MRF 4.7, and Balkrishna Industries 2.5. So that's the structure of the market as far as the auto stocks are concerned. And in terms of interesting stocks, well, it's IT, Coforge and Persistent are up 8% each, and Pharma. Keep an eye out on Lupin and Dr. Reddy, respectively 8 and 12.7% higher in the month of December. Sakshi.
Okay, so that's as far as the moving part within the auto space. What else is buzzing is the Adani Group stocks today. I mean, sharp movement on Adani Ports. It's 5.3% higher. Adani Green is also buzzing in trade, 3.3% up for this one. In fact, the entire space is up and about in trade. Adani Power has jumped by about 4% in trade too. You also have the other stocks like Adani Total Gas that's up in about 2% higher. Ambuja Cements is up 1%. So this space is coming back into action. Kush, what are you looking at within the group right now? Do you think this can be chased?
Definitely, Adani port is on my radar. If you stretch a trend line from the recent highs in August, I believe 1256. I mean, around 1260 is a good resistance. If we move out 1260, we will see a good sharp move to 1380, which is 200 average. So I'm not chasing momentum right away, but waiting for a confirmation tomorrow. Anything about 1260 is a good buy on Adani port with a stop loss of 1240. Target for the short term then would be around 1380.
Okay, got that. So that's as far as the Adani Group is concerned. Within the broader markets also, there are many other interesting names that are actually buzzing in trade. Let's actually pull up all these stocks that are actually buzzing. Saurashtra Cement, 17.5, now 18% higher in trade. We'll focus on the cement space also with this new buzz that's coming in. Apart from this, what else is buzzing in the broader markets is Taj GVK Hotels and Resorts, 14% higher in trade today. Very strong move. Elgi Rubber Company, that's up 13%. We marked in the morning Intellect Design Arena, now 13% higher. Along with this, Newgen Software was marked by Shell, that was also up and about and still hovering higher by about 6 odd percent. Then we also have stocks like Godfrey Phillips India, 9% higher. One of the recently listed stocks, in fact, two of those. MobiKwik, that's up by about 8 odd percent. You also have International Gemological Institute, that's also buzzing in trade. KFin Tech we marked in the morning. PNC Infra is now buzzing. A lot of buzzing action from various sectors. I'm purposely marking out all of these stocks from various sectors so that you know where there is a buzz clearly happening at this point in time. Okay, Kush, let's actually get down to understanding specifics. How are you looking at the cement space? Anything that investors should look at here? What is behind Saurashtra Cement's move?
Definitely, if you look at the Siemens chart, I believe they have bounced back from a good support. So definitely a good volume today. But I won't chase at current levels because volumes are pretty much low. It's a low beta. So if you're a medium term investor, maybe with the stop loss of 118, we can hold on. I believe if the momentum continues in next 2 months, we may see around 140 levels. So it's a low beta stock. From cement space, I believe Ambuja Cement is on my radar. Again, now Adani Group. I think it has consolidated for quite some time. And if we see, Adani momentum, we definitely, Ambuja Cement is a good buy with a stop loss of 540 for the target of 580. So from cement space at current levels, Ambuja is one underperforming, so we may look out there.
Fair point. 247. Let's look at the volume buzzers that are now buffeting NSE 500. This is a space where you see higher than average volumes with a rise in price. Exporter of precious gold, Rajesh Exports, 3.7% higher, 238, and 56 times the 5-day average. 2 crore shares have been traded. Blue Dart, this is very, very interesting. 5.5% higher, 7,447. 27 times 5-day average, which is 1.85 lakh shares have changed hands. Anything interesting? Yes. JK Bank. This is again a very high beta and low ticket item. 102 rupees, 3.7% higher, and a huge breakout in volume, which is 6.8 times the 5-day average. Kush, what are the charts of JK Bank telling you at 102 rupees?
Definitely, I believe JK Bank is a good investment call at current levels because the way business have opened up an interest of many companies is showing in Jammu and Kashmir. So definitely, this bank has a little advantage. We have seen a good correction from 150 level to around 90 levels. So with a stop loss of 90, one can invest. I believe first target will be around 120, above which for a long term 160 is a more feasible target. So definitely JNK Bank is a good investment call at current levels.
Kush, are you looking at these newly listed stocks at all? MobiKwik, the way it has rallied, I think in just 6 sessions, it's up by about 100% or 110% already. Today also it's up by about 8.5%. International Gemological Institute, that's also been buzzing in the last few trading sessions. Today even IKS Health, something that was backed by the Junjunwala family, after listing is again showing us some strength as well. So these newly listed stocks are actually doing very well today. In fact, yes, Inventuris is up by 13.2% at 2177 odd levels. Should one read into any of these suggestions that is coming in?
Definitely, IGIL I think is a good stock, but not at current levels. I mean, after 6 months, when the freezing period is over for the, pre-IPO quota investors, we always see some profit booking. So I would rather wait for some correction because they have rallied a lot. I mean, today also almost all the stocks are hitting, many of the stocks are hitting upper circuit. So definitely, if you've, been allotted in the IPO, just hold on. Fresh buying is not suggested at current levels.
Okay. Got that. So that's the view that's coming in on these newly listed stocks right there. Okay, let's look at the market yet again. What else is buzzing is also the pharma space. Okay, let us pull up some of the stocks here. Gland Pharma has improved. Remember, in the morning it had reacted negatively to the news flow. It's now up 2.2%. Sun Pharma, Abbott, that's in focus. Cipla, Divi's, Lupin, all of them are buzzing in trade. Kush, would you chase the momentum in pharma stocks? It's been kind of elusive so far.
Yes, pharma stocks are looking good, but I believe some correction still can be expected, sideways, time-wise correction. So not for long-term, short-term investment, but definitely long-term investment in pharma stocks are looking good. Dr. Reddy is on my radar. Since morning, I've been tracking this chart. I think Dr. Reddy is on a verge of a breakout. So I've kept a buy trigger above 1360 on Dr. Reddy. So keep frontline pharma stocks on radar. They may give a good move if markets are going to remain silent.
Fair point. Let's look at some more wealth creators. And today you have K Fintech, record high, 6.7% higher. This is following the footsteps of its larger rival CAMS. Between CAMS and K Fintech, ladies and gentlemen, they control India's booming market of mutual funds, the back end of which is managed by these two companies, 80% by CAMS and 20% by K Fintech. 1574, this is a record high. And of course, there is a sharp burst in volume. Intraday high for K Fintech was 1619. There is a move also coming in IIFL Capital, 1.4% higher, 344. Cement is what Kush and Sakshi have discussed earlier on in the show, but very, very sharp moves coming in on Swarashtra. Kirti Cement, then Dalmia Bharat is something to look at from the mid cap to large cap space. Kesoram Industries, Sanghi Industries, all of them in the green. We track 32 cement companies for you. About 15 of them are in the red, but broadly, you have a very, very strong show coming in. Hotels, year-end traffic, as also New Year's. Taj GVK, Sakshi's already marked this, 14% higher. Royal Orchid Hotels is something that you should be looking at, 366. Let me check the last time, what is the record high on ROHL. This is a fairly well-known mid-capitalized hotel asset. It was at 352 early morning, and all-time high on this one is fairly old. I see, I think 370, 400, 410. So very nice breakout today. Yes, 440. This was in April of 2024, sideways since then. Kush, any view on Royal Orchid Hotels and any favorite in this space?
Lemon Tree is my favorite from this space, and if you see a recent run up in Lemon Trees, I think Lemon Tree hotels are doing tremendous, and that they have launched many new properties in last 6 months. So I believe correction is expected around 140. So I have recommended and fundamentally also to my investors. So 140 is a good entry point for Lemon Trees. So this can be kept on a watch list. I mean, they are expanding widely even tier 2 cities.
Okay, got that. Well, apart from this, the other theme that is buzzing, Kush, is the entire insurance space as well. Are you looking at it keenly? The likes of SBI Life, HDFC Life, or maybe even LIC for that matter. A lot of regulations are changing. There is also this talk about how life insurance companies will be soon be able to sell health insurance policies as well. All of these regulatory changes that are taking place, amendments that are to take place in the IRDAI Act too. What is your own sense here?
SBI Life definitely I think it's on a good level to enter for investment, because we have seen a fall of 500 points, 25% from the top. So SBI Life is where I could take a little risk. 1350 stop loss. On the upside, the 1500 can be your target for a medium term.
Okay, got that. So that's as far as the insurance space is concerned. Let's take a detour into the market to see how some of the buzzing spaces are performing. CG Power, after a long haul, is showing some strength. It's among the top movers in the F&O space, 3.5% higher for this one. Autos are definitely driving in a fast lane today, and auto ancillaries have also pushed up because of that. So you have Craftsman Automation, Shanti Gears, Jamna Auto, Amra Raja, all of them buzzing in trade as well. That's another space that is in thick action. So both M&M and Maruti are top performers on the Nifty too. That's also buzzing well in trade. And apart from this, what else is buzzing is we've already marked the Adani group stocks. Is anything buzzing in the defense space? Well, Mazagon Dock is now up 1.6%. Remember, it's the last day to buy in case you are looking forward to take the benefit of the split that happens tomorrow. So keep an eye out on that. Kush, anything that you are suggesting to your clients on Mazagon Dock?
Mazagon Dock, definitely not. I won't buy for split action, but for long-term investment, definitely it's a good stock. I believe 3,800 at current price is what supports are looking at. So I believe there would be a correction. So I'm just waiting for a correction.
Okay, Mr. Godasara is very keen that the market's correct, and the markets are very keen that they rise. And herein lies the battle, ladies and gentlemen. 257. The Nifty refuses to give up 23,750 to the bulls, but we still have 32 minutes to go. Let us see how it ends. The Nifty IT index down 51 points, 43,622 for you. Let's look at the broader space in the advanced decline ratio. Well, now firmly in the space of bears. Only 900 shares are in the green, 1474 in the red. Essentially, when the market started, 1,580 shares were in the green and about 700 were in the red. The change in guard happened fairly early. So it's a sell on rise kind of a market. Let us see what happens on the F&O expiry of the Sensex, which is tomorrow. Remember, we are almost at the end of 2024. Both indices, the Nifty and the Sensex, have posted their 9th successive year of gains. This is a record ever since the Sensex started to trade from somewhere in 1978-79. We haven't seen 9 continuous years of green as far as the Sensex is concerned. Ditto for Nifty when it started rising, when it started work in 1995, if I remember correctly. More importantly, ladies and gentlemen, till 26th of September, the Nifty was up almost 21-22% year to date. We are now up just about 8.5, 9%, and we still have 3 sessions left till December 31, when the curtains will close on the Nifty. Okay, advanced decline is negative. Sakshi and I track 19 indices for you. It's even Stevens, 11 in the red and 9 in the green. Pharma energy, pure defensives in the market, 0.4% higher on the pharma index and 0.2% higher on the energy index. In terms of losers, it's metals, it's media, it's a minor downtick on the small cap index. I wouldn't be worried. And an even less downtick on the Nifty Alpha 50 and the mid cap 100. That's how the broader structure is of the market. Sakshi.
Okay, got that. Let's look at the markets again to see what else is pulling up in trade in this week setup. You have Indigo, that's up by about 2% at 47.10. That's buzzing. Avenue Supermarts is trying to recover its lost ground, 1.6% higher for this one. You have BHEL, we have not talked about this one for a fairly long time, 0.7% higher. Geo Finance slightly up in trade. These are some of the pockets in the Nifty Next 50 list that seem to be buzzing in trade. Apart from this, we are also looking at some of the other pockets. Let us look at Ola Electric is something that I wanted to discuss. We were discussing the auto ancillary pack, but Ola Electric is in clear focus today. Why? The stock had gone up in the morning. I think it shot up about 6 odd percent as well. And look at it now, 0.6% lower at 93.3. Kush, I'd come to you. Remember, Ola Electric expanded its network to 4,000 stores nationwide, registering a fourfold increase from its existing network. And this is one of the most significant expansions in the EV footprint that we have seen thus far in India. It has launched 3,200 plus new stores co-located with service facilities, and this is after, remember, the company had faced a lot of backlash as far as the service of the company is concerned. And with this expansion, Ola Electric has fulfilled its promise under the Savings Wala scooter campaign that it had launched as well. The stock had gone up right in the morning, but is now again slipped into the red zone. Kush, are you convinced with Ola, the move that we've been seeing? Will these expansion plans help in improving the service as well as the kind of sentiment that is around Ola? Of course, we do know that the stock price has been lying low and in this range after having shot up initially after getting listed. Your sense now?
I think Ola Electric is a sell. Definitely, they are trying to revamp their goodwill. But by the time they invest time and money in revamping goodwill, there are many competitors who are spreading throughout India. So definitely, I think it is going to have a tough time. So if my suggestion would be exiting Ola Electric at current levels and maybe buying something like TVS Motor or Bajaj, which is a corrective price.
Okay, that's a view that is coming in on Kush as far as Ola is concerned. There is a hectic activity on the pharma side. All the gainers, mostly all of them, on the NSE 500 at about through 2 p.m., 3.2 p.m. is from the pharma space. Look at Sun Pharma, Cipla, Ipca Labs. All of them are at day's high. There is absolutely no stopping Intellect Design. 1048 now, 15% higher. Remember, Intellect Design is also the top traded counter on the NSE 500. Let's look at the chart. Okay, Intellect Design has done fairly well for itself. It's not at a record high, but 2 days of very sharp moves. Day before yesterday, the counter rose 17%. Bit of a profit booking yesterday, and now at 1054 is what I see on the screen. What's the all-time high for Intellect Design? That should be visible on the weekly chart. That's also doing pretty well. Okay, we have almost 1194 as all-time high, if I'm not wrong. 1194, yes, 1200. So maybe in a day or two is what we will see. And the rally started 4 weeks ago when the counter was at 765. So a very, very sharp move coming into Intellect Design amongst the NSE 500 counters. And Pfizer up 1.3 from the pharma space, 4870. Cipla adding 1.15 at 1062. Cipla all the way, 1492. Lodha, macro developers from Mumbai, 1412.7% higher. So these are the stocks that are buzzing in very, very mild, very volatile trade that we have on the Nifty's last expiry for 2024. And of course, which has turned out to be very, very painful. In the last 2 minutes that I have been speaking, Intellect has added 2 percentage points. So maybe you'll see a record high today, or definitely a circuit now, 17.8% higher on the stock. Sakshi.
Okay, got that. Kush, we will thank you then for being with us on this edition to share with us all your thoughts and ideas. Season's greetings to you for the upcoming new year right then. Viewers, we will now welcome another top guest on our show, Avinash Gorakshakar. He's the head of research at Profit Mart Securities and he joins in on the show. Warm welcome to you, Avinash ji, and thank you so much for taking the time out. Season's greetings to you as well for the Christmas gone by and the upcoming new year. This time around we missed the Santa rally on D Street. We've been dwindling lower. It has tried to maintain a narrow range towards the fag end of 2024, but give or take, we are just about 9% higher for Nifty and Sensex, even though the broader markets have done well. What is your own sense as you look at the market setup right now, the macros that are going to be shaping up, the triggers for the markets? How are you really looking at the setup and your strategies?
Yeah, good afternoon, Sakshi, and good afternoon, Shell. See, I think markets are worried about basically two things. One is, the FIs continue to sell
Yeah.
a very large quantity of stocks almost every day. And I think the rupee has weakened much beyond everybody's expectations. So I think, these two macro factors are creating a little problem in the market. As far as the overall market sentiment is concerned, I think we are at the fag end of the year. So, volumes have anyway come down quite significantly. So I don't think you're going to see a runaway rally in the index. But starting January, I think you're going to see the Q3 numbers start flowing out. So I think you'll see a lot of stock specific action. And I think that is something which investors would be looking forward, because Q3, according to me, will be much better than Q2. And I think, selective sectors like capital goods, real estate, typically, building products, cement, these are sectors where a good amount of volume growth has been seen. So you'll see some kind of bright spots, but on the other hand, sectors like metals, or for that reason, typically, IT companies, typically this is a soft quarter. So markets will be looking at the management commentary rather than the numbers. So I think broadly it's going to be a stock specific exercise going forward. And currently, I think whatever we are seeing in the market is very natural. Today, I believe, is the expiry also. So that has also added to some volatility. But I think nevertheless, I think, markets are consolidating. I think one has to be now very selective. And coming in the new year, I think it all depends on what kind of flows, change for FIs, and obviously how the rupee stabilizes. Because once that happens, I think FIs will be in a much better mood to come and again start investing back in the Indian markets. But net, I think it's a good market where I still believe that, you can get good companies at good valuations. You need to moderate your expectations, and you need to give a time frame which is slightly medium to long term.
Avinash, a very warm welcome and season's greetings. You've mentioned cement as one space where you see value and probably better Q3 ahead, as also building materials. Two stocks that you could name from these sectors that make sense.
Well, I think from the cement pack, I think from the smaller cement companies, Shell, we are positive on Heidelberg Cement. We believe that expansion benefits plus pricing power will definitely help these companies, because according to my information, some reports have suggested that cement companies have already hiked cement bag prices by about 40 to 50 rupees per bag. And that benefit will partially be felt in the December quarter and probably fully in the March quarter. And I think, government is also going to push a lot of infra projects, a lot of government capex in the last 3 to 4 months of this financial year. So I think you're going to see a lot of action on the cement side, specifically on the infrastructure spending side. And as far as building products are concerned, I think large players like Kajaria Ceramics, or for that reason, players like Shankara Building Products, these could be interesting bets, because I believe that, these are largely, connected to the real estate market, and real estate has been a space where we have been very positive. We believe that markets like, Gurgaon, typically Mumbai, these are premium markets where pricing power has continued to remain very high. And I think inventories have been also selling very well. So obviously, an ancillary industry to that, which is ceramic tiles, is something which will benefit quite significantly. So I think, probably if the market is correcting, and probably you get these kind of stocks at lower levels, I think it could be a good opportunity to put them in your portfolio. Next year is definitely going to be pretty good for them, because we expect a better GDP growth number and a more stronger government spending. What happened was in Q2, government spending slowed down, and that's why we saw softer Q2 numbers. But I think some amount of momentum has already started in Q3, and I think you will probably see this momentum increasing once the new year starts.
Okay. Avinash sir, also wanted to understand from you, how are you looking at the broader markets, the mid and the small caps, with about 20-24% kind of a surge for this year net? What does the expectation go around for 2025? Are there still a lot of excesses that need to be further taken out here? What should be one's approach to these two segments?
No, I think, see, the broader market will obviously offer a much more risk reward. See, it's rightly said that if you want to make an alpha, in the markets, you cannot ignore the broader market and specifically the mid cap and the small cap segment, despite the fact that these are slightly, illiquid. The point which is very important is that the returns which these stocks give, if your call on the company and on the sector is right, then I think making 20-25% returns in a year from this segment is not difficult, unless and of course you do your homework well. But large cap space is something which is more of a matured space. I know you won't be getting more than 50%, on an annual basis, and that is where I think most of the high risk retail investors have been putting their money. In fact, most of the HNIs, PMSs have also started allocating a large amount of money to the small and the mid caps in the broader market. So I think, we got to choose the sector right, the company right, and obviously, in any kind of market, ultimately, it's the company's data points and the numbers which actually re-rate these companies. So we are very positive on this space, and I think it's a selective call. But clearly, I think one has to be a little patient now, because in this kind of market, with the kind of volatility you are seeing, earlier it was much easy to make money in this space, but now I think it's become challenging because a lot of players have entered here, and I think now opportunities are limited. But still, I would believe 2025 would also offer a decent risk reward, provided you select key sectors like real estate, capital goods, building products, cement. I think within this space, we have been looking at a lot of companies which are interesting.
Avinash, are you watching in awe the listing market of IPOs? Look at MobiKwik, selling price I think 280, listing price 454, and we've just had 680 in a span of less than a week. Look at IKS, look at Sagility. In terms of very sharp gains, we have Sai Life Sciences and of course Vishal Megamart. Anything in these 5 or 6 stocks that catch your attention or fancy for the coming 1 year or two? Or are these lost cases in the sense that one couldn't get in earlier?
So I think, Shell, I think people who are not lucky to get, money invested in pre-IPOs always take a call of buying in the secondary market. And I think, you got to take that call if you want to make money. So I think, one company which is very interesting is Vishal Megamart. I think, if you see the business proposition, a lot of people have told us that e-commerce is eating away the business of these, retail companies like DMart. But I think one thing is very clear, that India is a market where both e-commerce and the retail chains, the physical chains, will coexist together. And Vishal Megamart, mind you, it operates in tier 2, tier 3, tier 4 kind of markets, where the average ticket size of their product starts with 200 rupees. So, the kind of customer they are targeting is somebody who is not a very sophisticated customer, but where the mass opportunity is very large. And the best part is Vishal Megamart promoters have come a long way. In fact, the original promoter, who started this business, has actually nurtured it, and then it of course got changed hands in terms of management. But they operate in a very, very differentiated kind of business model. Their cost structure is also very, sharp and very, on the lower side. And most importantly, the balance sheet is very strong, very good cash flows, hardly any debt on the books. So my guess is that, this momentum, if they manage to show in the existing stores, and plus the kind of existing shop, network which they plan to execute in the next 12 to 18 months, would obviously mean that markets are waiting for at least 1 or 2 quarters of strong performance. Once the data comes in Shell, you could see a significant amount of re-rating, because I clearly remember that on the very first day of listing, a lot of institutional funds have bought this stock right from the open market. So there's a lot of interest in this counter. My sense is you could definitely get a decent upside here. Another company which is a moderate performer but which has got significantly upscale potential is Sagility India. It operates in the US healthcare market. Again, was a very, very, low priced IPO. But I think now a lot of institutions, the FIs, domestic funds have shown interest. And I think it's a very steady cash flow generating business, because clearly, this company handles the entire, process of all these US pharma companies. And that itself is a very big market. So my guess is that hopefully, if healthcare gets a big boost up in US, that indirectly will benefit a company like Sagility. So I think, one has to be very careful now in selecting the stocks based on the themes and based on the business model these companies run. And I'm quite sure that at 50 rupees Sagility and say around 105, 106 Vishal Megamart, a good amount of money can be made provided you have at least a 12 to 15 month kind of time frame. Because I think markets would obviously reward data and performance, and obviously then that re-rating is likely to happen.
How about Ola Electric, sir? How are you looking at the prospects there? Today, the announcement of 4,000 stores expansion has come in. Stock went up in the morning, but it has dwindled soon after. What does it really talk about, whether the company is looking at expansion plans, looking to cater all that and fixing the loopholes that exist, but still the stock price is not able to break out of this range. What is it that you're looking at in Ola, sir?
My guess is Ola, after the kind of negative publicity it got, I think it's difficult to erase that very soon. And most importantly, this is a very cutthroat competitive market. So I think, 3,000 new stores opened is definitely a good sign in terms of their marketing reach, their geographical presence. But what the market wants and what I think investors would be looking at is that when is this company going to generate positive cash flow? When is it going to become profitable? Till that time, I think, this stock is not going to get re-rated significantly. So it's a good business, good tailwinds, long term is good. But in the near term, unless we get positive numbers, unlikely that this stock is going to be re-rated very soon, because this is a very, very competitive business. A lot of cash is going to be used for advertising, for marketing expenditure. And till that time, making money on every vehicle is going to be a challenge for Ola. So I would say that somebody who's got a 2 year kind of time frame and has got a very high risk appetite can definitely look at it. Promising business, very aggressive promoters, but I think for the numbers to come positive, it would take at least 12 to 18 months, and probably after that the market will start re-rating this exercise. I think similar exercise happened in Zomato. Earlier people did not believe that model, but once the company started focusing on profitability, they became profitable. I think Zomato got re-rated very significantly.
And what about your
Avinash,
yeah, sure.
Avinash, when we see the outperformance for the month of December, which has been terrible for all large cap holders within the Nifty at least, there are two or three stocks that stand out. One of them, Amber Enterprises, now at a kissing distance of a digit change, 8,000 rupees, and K Fintech, 1590. The stock has appreciated about 26% in December alone. Uh, any views here? Are we at the threshold of a longer sustained move in these two companies, or was December just an exception?
No, I think as far as fintech is concerned, the markets are definitely giving a sort of a premium to well-established franchise, who are connected with the capital market. I think we saw BSE now touching new highs. I mean, despite the fact that now the new recent news in the market is that the Metropolitan Stock Exchange could be a very strong competitor in the very near term. Some important private placements have happened there. But I think, if you look at the players within this segment, the brokerage companies, the asset management companies, the wealth companies, I think markets are definitely giving these stocks a premium because there's a solid amount of sustainability in their business. Look at companies like CDSL. I think, going from strength to strength, because this is a business which is like an annuity business and a very low asset light model. So coming back to KFIN, I would believe that, compared to other players in the market, it appears to be relatively attractive from a 2 year kind of time frame. And business is assured, the business is going to grow, and I think it's going to grow exponentially with the kind of participation in the capital market. So I think KFIN definitely looks good. That's probably the reason markets have taken a liking here, and a good amount of institutional buying also happening here. As far as Amber is concerned, I think Amber is one of the large outsourcing players from almost the most of the top refrigeration air conditioning companies. So I think they've got a very strong tailwind, because last year the market was not good, but this time I think markets have done pretty well. The summer season has also gone pretty well, so I would believe that next summer is also going to be equally good. And plus they're also talking about some new customer relationships which are going to come in. So apart from Amber, I think smaller players like EPAC also have been in action. I think that is also a competitor for Amber. My sense is that despite the fact that the stock is fairly expensive, what the market is seeing is that for the next couple of years there won't be many major competitors in this segment. So that gives the stocks a kind of a premium in the market. So that's probably the reason you are seeing selective buying happening here.
Okay, so that's an interesting one right there. Let's look at some of the other pockets then. Pharma clearly is in a positive zone, 0.7% higher in trade now, with the Divi's Laboratories up 2%, IPCA Labs up almost 1.5%, Laurus Labs up half odd percent. A lot of these diagnostic chains are also buzzing in trade. Frontline pharma counters also buzzing in trade. Healthcare has also been among healthy performers for 2024. Avinash sir, how are you approaching this sector for 2025, and any key stocks that are on top of your mind here?
Yeah, I think pharma is a pack which is going to benefit, specifically the large pharma companies, because US continues to be the mother market, and I think with the rupee depreciation, I think some amount of currency benefit will flow to these companies. I think within that, if you look at the numbers from large players like Lupin, Dr. Reddy's, Sun Pharma, I think we are pretty positive on this space. I would not be surprised that the Q3, which is supposed to be a pickup quarter, you could see very strong numbers coming in from Lupin also, because Lupin reported very strong numbers for quarter two, and the management commentary was also very solid. I think Lupin also has a very large exposure in the US market. But I think apart from the top line pharma companies, we are positive on the hospital companies, the smaller ones, specifically companies like Yatharth Hospital, which operates in Noida. Recently, they made a QIB of almost 600 crores, and the profit traction for the first 6 months has been very solid. They made a profit of almost 60 crores compared to 47 crores in the first half. So I believe that with such a lot of money coming in, a lot of debt on the books is going to be repaid. Expansion is going to be more aggressive, and I think clearly in terms of the institutional holders, a lot of large funds have shown interest here. So I would believe that levels of 650, 675 in the next 12 to 15 months look very much possible. So I think hospitals is a space which I think one should keep it on radar, because coming budget also could provide some benefit for the for the hospital business. So hospitals and these pharma companies are typically some stocks which I think you should always use market declines to accumulate in your portfolio.
Avinash, there is hardly any difference in a hospital and a hotel these days. And not only you, even I make the same error. I often refer to hospital stocks as hotels, especially in North India, where you can find the choicest of foods in the lobby as far as hospitals are concerned. I'm so sorry. And then you can head up for a very nice surgery and then resume life. So there's no problem at all these days. There's no difference between a hotel and a hospital. Now, almost 7 minutes left for the last expiry of 2024 to draw to a close. The Nifty is 22 points up, 23,750. A nice, how should I say, volatile but low volume day. Hardly anything that's happening on frontline counters such as Reliance, ICICI Bank, and HDFC Bank. Volumes are sub 900 crore rupees. A very, very low volume day as far as the prices are concerned, but action clearly in MobiKwik. Now more than 5,000 crores have been traded. Action clearly in Intellect Design, in Masgaon, and several other counters. A view on MobiKwik, Avinash, something that you were lucky to buy into, or again, one of the many regrets that many of us have in the market, especially from the IPO space?
No, I think MobiKwik is definitely poised to do much better than Paytm. In fact, in the markets, this stock is called as the younger and the smaller brother of Paytm. But I think my sense is, in terms of the profitability traction, they've done a good job. They've tried to become profitable, and I think you are going to see a lot of action probably once the Q3 numbers are out, because the management sounded very confident in terms of scalability, in terms of the profitability traction. And I think initially when MobiKwik decided to go public, I remember their issue was postponed. They took a call that they will not go, and then I think after doing a lot of homework and a lot of cleanup, I think they then came to the market and it got a thundering success. So my sense is that these are companies which are from the new internet fintech category. So I think growth also will be very fast, but at the same time you need to be careful on the valuation part. From the time the public issue has happened, I think it's hardly been a month. So the stock has jumped significantly. So I think investors who are holding on the stock can hold on, but fresh buying at these levels, I think, gives you a little lesser margin of safety. So I think it's better to wait for the stock to correct, there would be some opportunities at some point of time where there could be some selling, because you would get some selling from the anchor investors, typically when their lock-in expires. So that could be a good opportunity to buy these stocks, because clearly somebody's opportunity for short term becomes a good long term opportunity for a long term investor.
Interesting one right there. Okay. Avinash, do help us now understand and identify any key sectors that you believe will be emerging as dark horses for 2025. Where do you think that the outperformance can lie?
Well, I think, see, as I told you, it's always better to stick to simple sectors where we get to know the green shoots happening. So I think, as I told you, infrastructure spending, so all the EPC construction companies, all the cement companies, in fact, real estate as a pack, both for commercial and as well as residential is going to continue to do well. And plus, I believe that, I think capital goods is one sector where I think possibly the government is going to give additional boost up measures. So I think, these are sectors which I think you can look at, probably, buying some of the quality names here. But I think metals is one sector which you would be avoiding. And of course, sectors like aviation, where except for Indigo, none of the other players are making any meaningful money. So these are sectors which I think one should avoid. And yes, a contra bet could be IT. IT is something which is looking interesting once Donald Trump, assumes office from 20th January next year. That could give a big fillip once the policies are rolled out, and I think we clearly come to know how the order win cycle starts, because already these companies have been battered down quite significantly. December may be a softer quarter, but I think the real improvement could start from March end. So January to March, could be a good period where a lot of commentaries from the managements could give one idea that how the business is going to shape up. So IT could be a contra bet. But I think clearly, FMCG, or for that reason, metals, they seem to be pretty weak. And I think you need to be careful about autos also. Autos have also shown a weakness in the commercial vehicle passenger car segment, except the two-wheeler, kind of segment. So autos also, I think probably one will have to wait for some time, because we have seen stocks like Maruti, Hyundai, typically, Tata Motors. These have all underperformed because I think volume growth for both passenger cars and commercial vehicles have taken a beating. So I think auto could also be a short-term underperformer. We'll have to see how things improve, in the Jan to March quarter.
Uh, just bringing back and dialing back on MobiKwik and Paytm. MobiKwik's market capitalization after a 2x journey from its IPO price to about 680 today is at a market capitalization of 5,500 crores. Remember, it has one business, which is helping you pay online. Paytm has a market capitalization of 66,000 crore rupees. Of course, many businesses, but it is primarily known for its payment ability online, and that business is yet to break even. So please keep these two things in mind when you try to evaluate MobiKwik versus Paytm. And yes, point taken. Once anchor investor book opens, probably you will see some sustained selling. People want to book out against an issue price of 280 and about 620 today. 328, wrapping up from my side. Top traded counter today is Amber Electronics. 2,785 crores worth of shares have changed hands. Intellect Design, 11% higher, 2,731 crores. Reliance, down 0.5%. It's the first Nifty stock at the fourth step of the NSE 500 top traded counters, 1,211 crores. K Fintech, very heavy volume, 956 crores. GIC Ray, profit booking and fairly sharp one, 794 crores. Counter is down just 1%, but in the morning it was at 502. Zomato slipping further, 273. And of course, you have a strong show coming in the Adani group of stocks. Let me just mark the all-time highs again. K Fintech, Amber, Newgen, 361 and Lloyd's Metals. Your Sakshi.
All right. We will thank you then, Avinash, for being with us on this special edition to share with us all your thoughts and ideas. Like you always share, may the upcoming new year turn out to be a fantastic one for you, both personally and professionally, and maybe see you more often on the channel and to seek more insights on the markets together for our viewers. Thank you so much for being with us on this special. And we'll start wrapping up the trade now. 23,762. That's how the Nifty has ended the last expiry of 2024. 35 points higher in trade. Not too bad actually. Autos stepped up. They pulled up in top gear, 0.9% higher as the top moving sectoral index. Pharma followed with consumer durables, PSU banks and infra stocks also showing some buying. Yeah, towards the last 15-20 minutes odd, we did see even the mid and the small caps come back into the green. There was a sharp recovery from the lows of the day for this space as well. Adani Ports as the top mover, 5.2% higher. You have M&M, SBI Life Insurance, Shriram Finance as other top gainers on the Nifty, whereas on the lower side, Asian Paints declined by 1%, Titan, Grasim, so the paint stocks declined, Tata Consumer Products, some of the consumption names clearly coming under pressure. But even in the PSU names, you had Power Finance Corporation and REC, both up 2.5%, 3% up. HPCL, BPCL also up and about in trade. BHEL, BEL as among the other PSU names that were also in thick shape right now. All right, viewers, we'll wrap it up at that. Thanks from both Shell and me on this edition. But do stay tuned. There's a lot more coming up on your screens even beyond the stock market coverage. And tomorrow we'll be back with another set of top market experts guiding you through what's coming up in 2025. How do you prep your portfolios for the new year? Stay tuned with us. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls, a show that addresses all your stock-related queries. Top market experts join in on this show and they listen to your queries and they advise you on a custom-made advice for your portfolio as well. In case you're watching this show for the first time, well, there is this WhatsApp number that's flashing on your screen. This is where that you can send in your stock-related queries. Don't forget to mention your name, your location and your contact details so that we can give you an opportunity to speak directly to top market voices in India. Now, apart from this, you can also write in your questions on the